Hey, this is Ron Janish with andrewscourse.com. Going to talk about how Andrews would find extremely high profitable trades that were low risk, relatively speaking. Okay? So let's see how he would start. Well, he would typically use multiple time frames and in some cases even multiple patterns. And that's why in May, for example, in the last half of May in the 2020, we're going to be covering that. It's what I call Professor Andrews Golden Trades. These are ones that have high probability, high win, high reward risk ratio. Right now, and typically it uses, we'll be focusing on 3 time frames, 3 entry setups, 3 entry signals, and 3 exit signals. And we'll go into all kinds of detail, and I'm going to show you what some of them are here. Okay. Let's go over here. Okay. So right here, what I did over here was, so I drew what I call the profit ladder, and you can kind of see it here. It looks kind of like a median line, then I duplicated it down. And if you notice, if you look in detail here on the weekly chart, you would see that over here is a reverse point wave. Andrews called it an EP, expanded pivot formation. Some people call it expanded triangles. It was originally touted by a man by the name of Gartley. And this was about 100 years ago. And he talked about a couple of different patterns. And we're going to take a look at the Gartley patterns. And I'm going to show you how to really take advantage of them. Okay, because the patterns I look at are pretty much Gartley patterns. Okay, so even though, as you can see, I'm using Andrews median line and stuff here. So along the way here, I have as you can see, clearly that a little while back, a few months back, prices hit this high here. This is a weekly chart, and kind of stopped. Now, what's the difference between this high here, and this high here? The difference is over here at this high here, you have a EP pattern. Okay? So, just like you have an EP pattern over here, and on the weekly, you have an EP pattern over here. And if you use daily charts, you'd see that you have a low one here, a low one here, and a low one here. Okay? So you really want to learn the pattern. So if you can find the pattern, hey, great, you find the pattern. So what I like to do is I'll find the pattern that I'm looking for, and I'm looking for one of 3. And even though Andrews talked about more than that, and if you look at the Andrews material, you'll see other ones in there. And you can use those if you like. And I'm going to focus the seminar on, it's going to be a 3-day seminar. It's been a while since I've done the 3-day things. And so what happens is since you have that here, here, and here, what you do is after you have that on the weekly or daily or whatever, then once you see that pattern in place, then you go and look for a textbook entry signal. And we'll talk about those 3 entry signals, and we're not going to use the MMLH or anything like that. I'm going to look at other things. And so we'll look at a textbook entry signal. Now, sometimes what's rather interesting is you'll get on a lower time frame, you'll get an entry signal. You'll get a pattern plus an entry signal, which is really cool, because what happens then is that will enable you to have a better reward risk ratio. Give you an idea here. Now, as you can see, I wound up going short at this price here. There's real money. Okay, so this is the Russell index, okay? And I wound up selling at this value here. Now, there we go, 14.99.30. So at this value here, okay? Now, given that entry and my target being here, my reward risk ratio is approximately 9 to 1. That's a pretty good reward risk ratio. Okay. Now, unless I have something that gives me a stupendous reward risk ratio, I don't want to take the trade. It's not a golden trade. I want a golden trade. And so we're going to show you the techniques for finding golden trades. And we're going to go over two areas specifically. Well, three areas. One are indices, so that's ETFs. We're going to use futures as an example. And we're also going to use Forex pairs as an example. Now, some people will only be interested in one or the other of those things. But the advantage of going through the seminar when we have several people there, and they have different tastes in terms of what they like to trade, just learning the patterns in those, in what we're going to cover, and they'll see it works in Forex pairs, it works in indices, it works in futures, works in ETFs. And then there's a real benefit in doing that, testing that out, so you really understand the pattern. Because in NLP, I'm trained in NLP, neuro-linguistic programming, kind of a form of psychology from back when. And one of our things is something called test and operate. Okay, so right now, looking for a target of down here. Okay. And what'll happen is on the three time frames I personally like are weekly, daily, and then there's an intraday one. And so I combine those three. Now, what's really fun for me is that sometimes I'll find a, let's see if we can increase the number. Let's see if we can, no, it doesn't want to do anything. Why not? Oh, it's /SPY. Sometimes let's, come on, baby, do it. Okay, there we go. Now, what happens is that after, and what I'll show you is after you see an EP pattern, what you do is you immediately shift to, if you see one on the weekly, for example, you immediately shift to a daily time frame or the intraday time frame. Actually, look at both and see if you see one of the entry patterns. There's ones that are specifically for daily and ones that are specifically for both daily and intraday. And if you see those, then you have a wonderful opportunity for a high reward risk trade. Okay, I'm looking here, see if I can find any on here, just what we call pattern number 2. I don't see it quite off the top of my head. Yeah, there we go. Boom. So, And then we also, what's very, very important is we also give you the exits with it. Okay, we're not talking, besides the stop loss, there's certain things that when this occurs, time to get out of the trade, time to take profits. Okay, and what's really neat about this is that if you set up a target on a daily chart, for example, and use as an intraday signal your entry, you immediately should do nice things to your reward risk ratio. Okay. Anyway, this, I hope you've enjoyed looking for the looking at the expanded pivot formation. What exactly is it? What does it really look like? Look, it's real simple. I'll see. You go here, 5, 4, 3, 2, 1. Notice that you can draw, Andrews would say, well, you can draw a line that goes this way and draw a line that goes that way. Say, so you have pivot here, I did it wrong. Pivot here, come on, doesn't like it. Pivot here, a pivot here, and a pivot here. So you have 3 high pivots and 2 low pivots. And that's your expanded pivot formation, right? Also known as reverse point wave and expanding triangles, and call it all kinds of things. So we'll show you how that works, and the 2 other patterns that are vital. And we'll do it all in May. See you there. Ron Janisch with the Andrews course signing off.